Intraday trading. A lot of people want to know what the best moving average is for intraday trading. So let's talk about that. So moving averages, probably one of the most commonly used technical indicators when we're trading, right? It's a simple way to identify trend direction, potential entry and exit points. They have a variety of uses. So the most common average is the simple moving average. And that's just the average price over an extended period, right? Generally 10 days, 20 days, 50 days, 200 days, doesn't matter. 5 minutes, could even use that. All we do is take that sum of closing prices over a certain period, divide by the number of intervals, right? It's the setting for the average, get an average price. When we're talking about short-term averages for intraday traders, we're looking at the 5 and 10 period. They're the most common ones out there. Now, a longer-term average can be useful if you want to keep the overall trend direction in mind. So to work out a 10-day moving average for Apple, for example, you would just total the closing cost from day 1 to 10, divide by 10, gives you an average price. So if we analyze the 10-period moving average on Apple here on this chart, the minor retracements in price, they didn't change the trend. So the trend is still up on this graphic. And when it comes to analyzing stock trends, moving averages are a key indicator for lots of people, right? We can actually use them also to measure momentum and even identify potential support and resistance zones. So we have the SMA, we have the EMA, which is the exponential. They're the two main varieties that we can use. Both can be useful in different ways. So let's take a look at this. The SMA, again, is calculated by just taking the average price over a set period of time. So for a 10 SMA on a 5-minute chart, you would just sum up all the closing prices over the last 50 minutes, divide by 10. So SMAs, they don't give more weight to recent data points. They equally weigh each day, each period, that closing price when they calculate the average. This is going to make them a little bit slower than the EMAs because they're going to lag behind the conditions slightly just because all past data is being created equally. So for short-term trading strategies like scalping or day trading stocks, EMAs could be more advantageous than SMAs due to their ability to react quicker to new information. This is because they give greater weight to recent values. So you're looking at a 5-minute chart. It's both a 10 EMA and a 10 SMA. Is there a difference that's going to make or break your trading strategy? Do they represent the price trend differently to you? You have to answer that question, not me. So what time frames are we going to watch when we day trade stocks? It's essential to know what time frame you're going to use. You can use a range of timelines. Each have their own pros and cons that you have to consider. So you have to evaluate the benefits and drawbacks of every single chart period you're considering. But the most common time frame used by intraday traders is 15 minutes. This chart here offers a blend of short-term price activity, right, filtering out some market noise. The 15-minute time frame allows you to quickly spot opportunities and still provides enough information about the longer-term trend if the overall goal is to trade in that trend direction. Another popular option is the 5-minute chart. This time frame, great for spotting quick changes in price and for entering breakout style of trades, including the opening range breakout strategy. So this shorter time frame, though, there's going to be more noise in the data than a 15-minute chart. So it could be harder to identify true signals from the false ones without additional analysis tools or price action. So for those that are just starting out intraday, focus on the 15-minute chart until that becomes really easy to read. What's the best averages for 15? The best average really is probably around the 10 EMA. And one way to use them, combine them with another indicator, MACD, RSI. So for a better understanding of the market's direction, you can observe multiple time frames to gain insight. So to gain an overall trend perspective, you could examine multiple time frames like a 30-minute chart and a 1-hour chart, trade in that direction. So using a 10 EMA provides you with greater insight into recent price data because it is a faster average than something like a 20 or a 10 SMA slightly. So when you combine various indicators like the MACD or RSI with different time frames like the 30-minute, 1 hour, you can gain some pretty valuable information about where the market may go next. That's going to make your trading decisions a little less random. So the 15-minute chart, great tool for intraday traders looking to identify trends and making pretty profitable trades because they can run. When you combine moving averages with other indicators, that can further refine your strategy. So let's talk about that. When you combine different types of averages with other indicators, that can be pretty powerful. So moving averages, they're a good way to gauge the direction and the momentum of stocks, but they may not always give you sufficient information. So if you use an RSI or the MACD or the stochastics, that can help you make your decisions based on more information than you'll get from a moving average. So the RSI, that just gauges the intensity of those price fluctuations in relation to past values over some specific time frame. So it's going to help you identify stocks that could be overbought or oversold by comparing current levels against the historical data. When we use these together with averages, we can look for divergence between the two. That could indicate a potential reversal point in that instrument. MACD, my favorite, another popular momentum indicator. The MACD line simply shows how far away two moving averages are from each other. That can be interpreted as how much momentum is in play. Stochastics oscillator, another useful indicator, helps to determine current price cycles. You can also use it to gauge momentum by looking at the hook of the fast line across the slow line. Let's start with the 5-8-13 strategy. People talk about that a lot. We're just using the faster EMA averages. It's going to allow for more opportunities for trades with the slightly longer ones for trend. So the short-term period EMA is going to have a 5 setting. Longer periods are 8 and 13. So when you compare these three averages, you will see which direction to trade as well into when to enter or exit the trades. And you can use other indicators. You can use price structure, support and resistance, trend lines, doesn't matter. Whatever works for you. This chart here, I'm using the MACD 31016 SMA settings, otherwise known as the 310 oscillator, and it's going to help confirm the momentum of price. So when price breaks below all of the averages and the MACD line begins to hook to the downside, showing the momentum direction, you can have a sell signal. Price can be either on the trend line or breaking below it for further short trade confirmation. So you want to see the 5 EMA below or at the same price point as the 8 EMA when you're selling. Having a longer term moving average in the same direction, it's a pretty decent signal to look for, extra confirmation. Flat for the longer EMA, that's fine. We just don't want it curling in the opposite direction. So when you're intraday trading with moving averages, you got to understand there's going to be a lag between the indicators and price action. So both of these trades are showing strong bearish candlesticks, which shows what? Sellers are taking over. If that MACD signal line is trending in the opposite direction, you may want to ensure that you're a little bit more conservative when you're taking your profits because this move could be short-lived. So a 5-minute chart shows a perfect setup to the upside. Stop loss levels on the buys can go below the entry, and for sells go above that same candlestick. Now look, this strategy may not always be reliable, right? Markets can move against a confirmed trend at any time. So if you're going to use this kind of approach, you got to make sure you place your stop loss, right? You don't want to take too large of losses and small little profits. Pretty simple. When it comes to the best averages for intraday trading, consider a combination of SMA and EMA if you'd like. You can use other indicators, MACD or RSI. The 5-8-13 strategy, not a bad way to trade stocks on a 15-minute chart. And there's a ton of indicators out there. We have a free guide here. Stop guessing how to use them, right? This is a free trading indicator blueprint we put together. You can learn the truth about indicators, how to better use them. A lot of people charge over $97 for this kind of a course, but today, totally free. Link is to the left or in the description. Any questions, pop them below. Talk to you soon.